Anastasia, let's talk about how good this number is. The market reaction is massive. Is it commensurate with how good the data is?
I think it is. Look, this is an extremely welcome piece of news that we've been waiting for, for months. We have not had a positive inflation surprise. And finally, there's a lot to like in this inflation report. You're starting to see food prices, for example, not rise that much. You're starting to see durable goods that are actually starting to decline a little bit. You're starting to see used car prices that are falling. So you add all of that together, and the monthly print is 0.4. That is significant because in order for us to be on course to 2% year-over-year inflation, we could not have had 0.6, 0.7% monthly prints. We really need to bring them down to 0.1, 0.2%, or maybe even deflationary. And the fact that we have stepped down the monthly pace of increases, this is really the first step, and that's really, really welcome news. Now, we have not sorted everything out. For example, shelter inflation still accounted for half of the rise in CPI, and it rose something like 8% year over year. So that's still a big problem. But the fact that the monthly pace have started to come down, I think does give these markets something to celebrate, and we should absolutely process this as good news.
Okay, so is the good news that inflation has definitely peaked, or is the good news that we're going to continue to see this kind of decline in CPI? Like, which narrative are we buying with the equity market right now?
Well, I think it's been a fool's errand trying to call for peak inflation, and we've been disappointed time and time again. But I think it is the first step in hopefully a series of steps to try to begin to bring down inflation. So that definitely gives the Fed a little bit of wiggle room. And look, they alluded to the fact that they should step down the pace of increases in the coming meetings, if not this next one. So this solidifies that view. And look, I know that, they're still going to continue to hike rates, and the next destination is likely to be 5%, but that's already priced in. And so with the positive inflation print, the Fed is not likely to be more hawkish, and we've sort of priced in this next phase of hawkishness. And I think that's why the markets are really celebrating this and taking it with such positive reaction.